Alright, Marco Palmero, founder of Ulysses, and in this video I will discuss with you how to find profitable small businesses for sale. So if you are an entrepreneur, a business owner, or even an investor and you're looking to acquire small assets to build your business or grow your existing business, then this video is for you. I'm going to be sharing strategies that we have used for ourselves for finding, selecting, and closing deals, but also strategies that we have implemented when we consulted with clients or we did some of the work on their behalf with our Done For You service. With all that being said, I think we need to take a step back before we actually talk about how to find opportunities, and we differentiate between the type of opportunities that you're going to find in the market. So when somebody looks for small businesses for sale, immediately the first thought they get is, I'm going to look for something that is available on a site, a public listing, or I'm going to hire a third party that might have opportunities available, and I'm going to work with them to identify the most suitable solution for my needs. Now, that is not a wrong approach, but in my opinion and from my perspective, is not the optimal approach, because it isn't allowing you to target the entire market and ultimately tap into all the available opportunities. As we will discuss later, there are many ways to find deal flow and spot profitable small businesses for sale, especially if you're targeting assets below 25 million in total purchase value. Now, what I'm about to say applies for pretty much any country and geography. I use these strategies in Europe, in the UK, North America, even in the Middle East. So fundamentally, everything I'm about to share with you has been tested in different markets and different sectors and has been effective for us and for our clients. Now, with all that being said, let's get back to my point about working with third parties or finding a business that is available for sale and that is listed on a site. Now, there's nothing wrong with you starting your process and your evaluation process by looking at assets that are listed on sites, that are available on tools, and kind of like initiate this selection and this analysis of the market by looking at what's available on these platforms, through these professionals, and all these sorts of things. Once you get to a certain point and you realize that deal flow might not be enough, that's when you will realize there are multiple channels that you can tap into, and that's really one of the things that we specialize in. People that are capped from a deal flow perspective and want to get more and kind of like build a solid automated pipeline of opportunities and focus only on closing the deals instead of spending a lot of time finding them. So when you initiate your process, chances are you're going to be talking with investment bankers, brokers, sometimes even accountants and lawyers, right? Accountants and lawyers. The reason why I put them all in the same basket is because all these people are professionals, right? They are in the industry, they might have access to deals and transactions that you might be interested in looking at. And so all of them will provide different levels of support in sourcing these deals. And if you build the right relationships, you can find good deals through them. Now, there's really a limit to the amount of opportunities that they can find for you, and based on my perspective, there are multiple channels that you can tap into that can integrate the service that these professionals provide. Now, I'm not going to talk specifically about how you can build relationships and interact with these people, because that's kind of like the obvious answer and where all people are going to. So chances are, if you're watching this video, you have already gone through these professionals, maybe you want more deal flow, or you already closed some deals with them and you're looking to find your next one and you want to increase your pipeline of opportunities. So how do we go about this, and how do we integrate your deal flow origination strategy with other channels? The first thing I want to bring to your attention is that in most cases, the opportunities that you're going to find through these professionals are going to be listed opportunities. So targets that everybody has access to, and as a consequence, very competitive business deals, right? Unless you have a very special relationship with a broker, with an investment banker, or with an accounting firm, it's going to be hard for you to receive deals preferentially, so to speak. And as a consequence, you're going to be competing against all the other buyers that are targeting assets in your own industry. So for example, if you're buying, I don't know, beauty salons, all the other guys buying beauty salons in your geographic area are going to be scouting for deals, and they're going to be talking with professionals like this one for opportunities. And so if you aren't prepared to close a deal quickly when a good opportunity comes along, you might end up spinning your wheels for a long time without getting any traction at all. My point here goes to off-market deals, because even though this part of the market, it is, I would say it's important, and it is fundamental for you to build a solid pipeline. It is also true that there's another portion of the market that it's called off-market deal flow, right? Off-market. And give or take, about 50-60% of transactions that are found yearly are off-market, right? It really depends on the country you're operating in, but the stats are pretty similar to one another. So almost half of the opportunities that you might get access to are not listed through a site, they're not available to investment bankers, they're not opportunities that a lawyer or an accountant would share with you. And so how do you find these off-market deals? How do you build a system that can go ahead and spot these targets on your behalf? Well, that's one of the things that we do when we consult with clients or we build up a system for them. We create a solution that can bring them opportunities on a consistent basis, not only through conventional channels, but also through unconventional channels. And some of these unconventional channels that I'm going to list here are calls, emails, social media, networking, events. What else? There are many others, really. I can go ahead and list more, but you get the idea for now. There are a lot of different players, a lot of different channels that you can leverage to find opportunities that are going to be less competitive and in some respect also better from a financial perspective. Because the truth is, through conventional players, you might find a lot of listings, but some of these listings might be redundant or not even good at all. And so what you want to do, at least from my perspective, is tapping into additional channels where you can find hidden gems that might not be available or for sale on the public market, but might be very good deals, and there might be motivated sellers that are willing to exit their business. They simply don't want to advertise the fact that they're selling their business. And so with off-market deal flow, what we're really doing is we're going on the offensive, and we are building up a system that predictably reaches out to all the owners in the industry and helps you build connections with them so that you can qualify transactions or potential transactions for that matter. The point about off-market deal flow is that it's fundamentally a lead gen strategy. So I generally look at finding deal flow as lead generation. So if you are a business owner, if you already have a company, you will certainly understand this concept. In order for you to get sale, you first need to generate leads. And so the process is pretty much the same for off-market deal flow and deal flow in general. You want to get a lot of leads before you can start filtering them down, and the lead quality that you're going to receive also going to determine how many opportunities are going to get to the end of the funnel. Because if you input wrong deals into your funnel, at the bottom you're only going to get a few that are maybe not even going to be so good. And so what you want to do, at least from my perspective, is creating multiple channels that are bringing in quality deal flow, and kind of like have a funnel that brings as many opportunities to the bottom as possible. And that's ultimately the goal of off-market deal flow, right? Finding opportunities that are less competitive, that are better from a financial perspective, and that you can negotiate from a position of strength so that you can close more deals. And if we look at off-market deal flow as a lead generation process, what we want to do again is to have multiple channels for generating these leads, a system for qualifying these opportunities, and then a filtering process to get them to the bottom of the funnel if they are qualified. So the idea here is we're going to be reaching out to business owners using multiple channels. We're going to use the different strategies and solutions to qualify them based on how we reach out to them. And subsequently to that, if the target is qualified, we're going to take them down our path so that we can start the negotiations and potentially close the deal. Now, all these channels, there's just a few of them, but there are really, dozens of them, can enable you to consistently get opportunities even if you're not investing a lot of time in finding opportunities, because a good email networking system, a good affiliate system, for example, can really bring you opportunities without you being on the offensive all the time. And that is really important from my perspective, because once you start building up a pipeline of deals, you're going to need to invest more time talking with the good opportunities, seeing the facilities, negotiating the transactions, and then closing the deals. That will take quite a lot of time out of your day, and if you don't have a system that is still getting opportunities for you, at some point you're going to be stuck because you're not going to have more inflow of deals. Maybe the ones that you have negotiated didn't close, and so you need to start the process all over again. Instead, if you have a pipeline that is constantly filled by different channels, all of a sudden it doesn't matter if a deal for one reason or another doesn't close, because you're going to get new opportunities every single week. And so you're going to be more confident in negotiating the transactions that you got, but also you're not going to be pissed off if something doesn't close for one reason or another. And we all know that acquisitions are a numbers game, so you need to see a lot of deals in order to actually close one. So the point is, again, a combination of public listings, if we want to call them this way, and off-market deal flow is mandatory, at least from my perspective, for tapping the market entirely and getting in front of as many people as possible. Now, the beauty of off-market deal flow is that, again, it can get you through people that might have a strong interest in selling the business, but might not be advertising that, or might not have an investment banker representing them. What are some of the reasons for that? Well, small business owners, from my perspective and based on my experience, are not necessarily too savvy about exiting their business. There might be the first time that they're exiting a company. They might be afraid of dealing with intermediaries, and for one reason or another, they might not be interested in listing their company on a site or on a platform. Maybe they are afraid that that will disrupt the business. Maybe they are afraid that their employees will leave once they see that the company has been listed for sale, and many other problems that might be in their heads and that might make them lose sleep, right? So for all these reasons, there might be premium opportunities that are available for sale, but nobody knows about it, right? And it's our responsibility as a buyers to go ahead and find them. Because once we find them, we have an advantage. Nobody else knows that this opportunity is for sale. So we can negotiate one-on-one with kind of like a very strong position. And in addition to that, these opportunities might also be better from a financial perspective than the ones that you find listed online. And so my idea is to always have one, a full pipeline, and two, preferential access to opportunities that nobody else has access to. And again, this is one of the systems that we have built for small companies, big companies, entrepreneurs, investors that wanted to find deals on a consistent basis. Some of them just wanted us to teach them how to build this system and then train their team on doing that. Others wanted to work with us one-on-one and have us build the whole thing for them. That's why we generally have a process that takes between 2 and 3 months to deliver results, because it is a ramping up and it is a process that compounds over time. You initiate all these channels, you start building the infrastructure, and as leads start to come in, you understand what is working and what is not working based on your industry and your geography. Then you adjust, and then once everything is functioning and it's working at full capacity, you can just collect results every single week. And that's why people then retain us for a long time, and why we're booked up, months in advance, because once people understand that with this strategy they can get in front of pretty much any single business owner in their industry, they don't want to leave or let go of this competitive advantage. But having said that, how is it that we find profitable small businesses using these two channels? Well, fundamentally, the idea is to reach out to business owners using the channel they're more comfortable with. Because despite the fact a lot of listings might be available through brokers, investment bankers, and other professionals, other businesses are not going to be listed, as I just said. But also, some of the businesses that are not listed are not going to be responsive to certain messages or to certain approaches. Maybe some of them don't want to deal with an intermediary. Maybe some of them don't want to talk through email. Some of them might not want to talk via call. Some of them might just want to meet you in person. And so the objective of building up a strategy that is multi-channel, so to speak, is the idea of getting in front of the person using the medium he's more comfortable with. So I'll tell you a little bit of a story about this. For example, when I was in America, I used to get very good results by having a sequence that was like call, or call, email, meeting with the business owners, because they were very responsive to calls, and provided we were able to get past gatekeepers and talk with the owner, then we were pretty good at screening the opportunity and getting an email or a meeting set up. In other parts of the world, for example, the Middle East or the United Arab Emirates, it was significantly challenging to get in contact with business owners using calls. Not only because English was not everybody's primary language, so communication was a lot harder, but also because people were not used to that type of approach, and there were certain rules and regulations around that type of approach that we couldn't actually work around. As a consequence, we needed to go through an in-person approach a lot more, and that's when networking, and I would add here also affiliates, became very useful to us, right? Because at that point it became all about shoe leather, all about meeting people in person as fast as humanly possible. Sometimes a message outreach was enough for us to get a meeting and a visit at a business, which might have been, not necessarily good for us, because it was less easy for us to filter the targets up front. So a lot of the visits that we made were not actually good, and so we needed to discard the opportunity. But still, that enabled us to find tons of deals, tons of opportunities. And depending on, again, the market, the industry you're operating in, different channels will work in different ways. And that's why we generally work on bespoke solutions with all the clients that we consult or that we work, on a one-on-one relationship, because it really comes down to what is working in your industry and what's going to deliver the, better results. So how do we find deal flow using these channels? Well, once we have nailed down what are the channels that are working best, then it is time to test these channels and test ways to reach out to these people, because all channels are going to have different approaches that are going to work or not work. For example, in a call sequence, we might have a call leading to a follow-up call on the personal cell phone that is then leading to a meeting, or a call that is leading to an in-person meeting right away, call leading to an email that is leading to a call to a personal number. The variation and the permutations are many. Through email, we might have a 2 email sequence, a 3 email sequence that is then leading to a call or a Zoom meeting, 2, 3 steps email that then lead to an in-person meeting. Again, networking might lead us to personal phone number conversations or personal meetings at the facility because the networking event was in another place. Affiliates might start with a process of teaching what to do to the affiliates so that they can then bring us leads that are then going to convert into live visits when it comes to qualifying the acquisition target. So once we understand what are the channels that work best, we want to find the, I would say, workflow that delivers the optimal results. And after we got that, then we just let the system run on its own and keep bringing us deals on a consistent basis. And again, this strategy has worked well for surprisingly, businesses that were significantly bigger in size than the ones that we generally work with. So, as I mentioned before, we generally find opportunities that are, 25 million, 50 million, 5 million. I would say anything sub $50 million is our sweet spot. But we did engagements with companies that were looking for bigger opportunities, like $100, $250 million deals. And these systems work just as well. And so my point here is it's all about finding and tuning the strategy based on what is the goal that you wish to accomplish. And the reason why I'm spending a lot of time talking about how to generate deal flow is because many times I see people that focus on the wrong aspects, which are the technical steps that you need to take to, qualify, negotiate, and close a deal. But the problem with all these steps is that unless you have a solid pipeline of deals that brings you opportunities that are good, there's no point in focusing on the technical side. You're never going to get enough deals. You're never going to get enough good deals for you to close one. It's almost like saying, I'm going to focus on sales without having leads that I can talk to. There's no point in doing that. There's a combination of the two aspects that we want to do. And starting with the lead generation process, or deal flow, as I call it, is actually mandatory. Once you have more deals that you can handle, then the origination process is not an issue anymore. And so you can just focus all your time on negotiating, qualifying, and closing the deals that are actually good. And that's actually the objective. And one of the things that we always want to crack when we talk with people that wish to get our support from a consulting perspective or a done-for-you perspective. The first step everybody needs to understand is that we need a strategy for originating deals. Once we got that, everything that comes after is a lot easier. And It has provided, again, results for companies that we honestly didn't expect could get these much results. So companies that were looking for $100, $250 million deals. But still, that has worked out quite well. Now, what are some of the sectors that we're very strong at? I mean, healthcare technology, manufacturing, any kind of startups, solar, crypto, every sector that you can think of, we've worked with. Boring businesses like, laundromat, vending machines, home health facilities. All these businesses can be found and selected using a multi-channel strategy like this one. And again, we have a good portfolio of clients. Generally speaking, we're booked up months in advance, provided you pass an application, which is what we need to have in order to work only with the ones that are committed in building up a process like this and in paying, thousands of dollars in fees for getting a system that is going to then bring them $1 million opportunities, right? But we might have from time to time available slots. Of course, I'm not too sure about it. You need to check the link below in the description, see if the qualification spots are available. If that is the case, then my team can take on your application, see if you qualify. Of course, we don't take on applications that are not complete, that are just sent out randomly. We generally have a pretty tight process for selecting people and a qualification call that you need to go through to understand your goals and objectives and whether or not there's value, that we can get out of working together. But provided there is, if there are available slots, we can then look at solutions to leverage both channels. So deals that are listed on the market, deals that are off market, to build a pipeline for you. So again, if you're an investor, business owner, or even a entrepreneur, and you're looking to acquire assets, but you want to build a pipeline and create a system that constantly brings you opportunities, then this is what you've been looking for. Because once you have that, you don't need to worry about finding your next deal. Deals will keep coming, and you just need to focus on execution. And most people think, there are many technical problems behind closing a deal. And of course, we all understand there are complexities in the process. But the most important issue that many people, even big companies, need to overcome is deal flow. If you do get quality deal flow, quality opportunities to your door every single week, then everything else becomes a lot easier. And that's why we focus so much on this, and we consult with people or we work one-on-one with them to build up systems that ultimately deliver results. So again, this is a little bit of a breakdown or a summary of how deal flow can be channeled through multiple verticals, or can be found through multiple channels. Specific videos will be recorded around each one of these channels, so make sure you subscribe to the channel and check out other videos that might be available already that are going to be talking about how we integrate every single piece into a comprehensive strategy for finding deal flow. If you're interested in getting support and building up a strategy for yourself, check out the link below, see if the applications are available, submit a full application, and then our team will reach out to you and talk about how we can engage together, if we can engage at all, because we get quite a lot of applications and not a lot of them pass the selection phase. So that is pretty much it, and I will see you in